All right, welcome back, everybody. Happy Friday. Bitcoin filled the CME gap, had a little bit of a dump and a bounce, usual choppiness, consolidating above key support, macro support, going all the way back to the 20K top to 14K to where we are now. So everything is still looking good, though people are still fearful of a minor capitulation. So I found a nice article of 4 reasons why we may not get the death spiral with miners. Okay, so if you like these videos, smash the like, leave a comment, tick the bell for notifications. If you're not getting notifications, subscribe if you're not subscribed. This is Crypto Rolly, the crypto watch that never stops, live technical analysis, price predictions, and trading. All right, this is not financial advice, guys. I am not your financial advisor. Do your own research, trade at your own risk. Let's look at the market. All right. Bitcoin down 2% in the past 24 hours. The volume still looking good, over 2 billion. So definitely tradable action. Definitely choppy though. It's not rewarding anybody that's looking to hold any positions longer than a few hours. That's why personally I'm starting to lean more towards a scalper, just trying to adapt with the market. But you can see small losses across the board here. Tether's up slightly just because everyone's been moving out of their crypto into Tether. Crypto Fear and Greed Index still in this fearful range, kind of neutral at a 44. People are worried about the capitulation, possible dump post halving. So we'll look at that article. Coin Farm, let's see, slightly bearish, 52% to 48% on BitMEX, pretty half and half on Binance. And, pretty split down the middle in the last hour as well. We're kind of sitting on top of support. So, and we're going into the weekend. Price can get, sometimes slow and choppy, wicks, fake outs on the weekend. Or, last Saturday we had $1,000 dump. So you never know. Looking at the 4 reasons the Bitcoin halving won't trigger a big minor capitulation. All right, so in the past, we have seen where when they make it twice as hard to mine Bitcoin, the electricity it takes is double. So it costs more for miners. And if the price, current price of Bitcoin isn't profitable, they are forced to sell their Bitcoin, okay? So right now, production cost is about to double to 14,000. I guess this was right before the halving. That was 70% above the current price at that time. During the last halving, the price was just 10% below production cost, and price collapsed 20%. Without FOMO now, expect a big minor capitulation, 30% plus. So you have this type of death spiral, mining death spiral people are talking about and people are afraid of, combined with, those that fear a dump in the stock market, a recession, so the pandemic fear as well. However, this time around could be very different for multiple factors. Let's start with the first one. China has about 65% of all Bitcoin computing power, okay? In the Chinese province of Sichuan, I hope I pronounced that right, is soon to enter the rainy season. So basically, a large portion of this mining is done in this Chinese province where it's having a rainy season. And their electricity is actually relied on hydropower. So with the abundance of water during rainy season, it allows the hydro plants to generate more energy than usual, allowing these large-scale mining farms to negotiate a better price so they can get cheaper electricity because there's more of it, right, during the rainy season. So that's one factor. Another factor that's actually bringing down the electricity price across the world is because of the pandemic. People are staying home. There's just, the oil prices are record lows. The electricity rates are low. So across the globe, not just in China, you're having a lower electricity cost. So in previous halvings, the electricity cost was too high post halving, so miners had to sell their Bitcoin. But if the electricity cost is actually cheaper, they may not have to. They may still be at a profitable level. Also, with the pandemic and these stimulus packages, the United States is not the only country that's been giving out money to support its economy. You have the printing of fiat, just printing out of thin air. So it's actually devaluing the fiat currencies globally. So as the fiat currency devalues and say Bitcoin stays the same, it's actually making it cheaper for the miners as well, okay? And then on top of that, there's a Bitcoin mining difficulty adjustment. So when the hash rate drops, the difficulty adjustment meets it. So let's find a better term here explaining it. So after the halving, the difficulty of mining BTC automatically adjusts to maintain a steady block interval. All right. The network automatically adjusts how difficult it is to mine BTC every 2,000 blocks if the computing power, known as the hash rate, drops. Okay. So mining difficulty adjustment stops a cascade of miner capitulation from occurring, as it will get cheaper to mine BTC when the hash rate drops. So Bitcoin was designed, for this situation to happen. So using these four scenarios or factors, possibly we don't get that massive sell-off. All right, leaving that there. Leave a comment. Tell me how you feel. Okay. Just wanted to start a little bit of a discussion possibly. Now let's get back to the charts. All right. 94.73. We can see we filled that gap where we're on a daily. Okay, so we filled the gap, and then after filling the gap, we have had a bit of a sell-off. Looking at the 4 hour, we had a little bit of a dump, a nice little bounce. We're actually looking at, I have a lot of trend lines here. So let me break down these trend lines real quick. All right, so from the top 20K, 14K, using candle bodies, this trend line coming down, we are actually currently just above it. And after we kind of had a bit of a correction, we can say we found support above it. So let me zoom in on the 4 hour there real quick. So you can see we are above that yellow dashed line, and it's crazy, you draw this line and we touched it there, all right, and now we're finding support above it again. Also 9200. So if we lose this this trend line here, 9200 is a horizontal of interest based on previous price action. You can see 9200 was this horizontal here. You had a resistance, support, resistance, and would be flipped as support. You can see we actually wicked down and bounced off of it here as well. So if you lose that level, you could see 9200 as the next support level down. And then we had a little bit of a ascending triangle breakout we covered in the video around 89.75, call it 9K. So I would say 9200, then 9K. You drop past that level, we have this steep rising trend line coming from the bottom, still rising at current price. This is down around like 8600, and then you have an 8400 horizontal resistance using previous price action as well. So one level at a time, you can see, but these should all act as support levels on the way downwards. Okay, the volume has it looks like maybe a possible double top. You do have a lower high here, and we do have a lower high here. So high, lower high, another lower high. So if you do break down and lose, I say, you lose this rising trend line combined with that 8400, you have put in also a lower low. So we were saying here that when we were at this level, we were still having higher lows, low, higher low, higher low. This was still a higher low. That's why I had the confidence to take a long. I profited nice during this rally here because I knew this was a higher low. Now, however, we did not break above this level, sticking in another lower high. So if we do return back down here, now you have lower highs and lower lows, putting in a downtrend. You lose this rising trend. You might get a sharp drop. We'll have to see what happens, but you could be looking at this horizontal level at 7,800, and we've been talking in depth about 7,800. So that would be the next level. I don't want to see 7,800 lost. If you do, the next level down is around 6,900. I talked about that in depth in yesterday's video too, with that support bounce box down there. I can show you briefly in just one moment. But guys, yes, lower high, but if we can maintain that support above this level, we could be consolidating and put in some type of a bull flag and end up breaking this level anyways. Okay, so currently if you look in a little bit closer here, you can see a little bit of a triangle. So this is the 1 hour, a little bit of a downtrend, and then a flat line of support. So if we're able to break above this, you could have a breakout. However, there will be horizontal resistance coming in right here around 9,800. So we'll put that there. So over the weekend, it is possible to break here and then get rejected and kind of consolidate in this region here. So if you did something like that and then ended up breaking above, this would be a bull flag pattern. And it's not looking so bearish anymore, is it? Let me zoom out there. That wouldn't look bad at all. Okay. So this is what we're looking. We want to hold that support level, okay? Because if you lose that, this is definitely looking more like a downtrend of lower highs. Otherwise, right now we're just hitting resistance and consolidating underneath it. But if you break down, we break down, and you just have to adjust your trading from there. Let me get rid of those drawings. All right, we can see that. Right now, trying to test this horizontal 9,400 support right now currently. So we'll see if it holds or not, okay? So what did I say? Oh, the Coinbase? Yeah, the Coinbase chart, why I said 6,900. I'll show you real quick, and then I'll do a breakdown, just see where we're at with all of our indicators. So I was talking about in 9,400 support right there. This is just another chart, same type of thing, but, just in a different perspective, let's say. Okay, so you have that downtrend resistance. And like I said, these downtrends can be very subjective. So drawn a little bit differently, we actually got rejected by that downtrend. However, I have this resistance box based on previous trading. You can see that support level there, resistance, resistance, hit resistance there, resistance, resistance. And that's from 9,400 to 10,500. So, we broke into the box and we're maintaining in the box above 9,400. You want to stay above 9,400 preferably, and then attempt back to that 10.5. 10.5 can be, a hard resistance to break. You can see 1, 2, that would be the third one. So potentially even triple top if you get to 10.5 and get rejected there. So you need to break that, consolidate above. Yellow line is 11.8K CME gap that still hasn't been filled since August 2019. Now, you break below, we were talking about 7,800 needs to hold, and that's because you have these support levels, resistance. So this is a key horizontal resistance support level, 7,800. Also, the weekly EMAs are there as well. Now you lose that, and we're looking at this support bounce zone around 6,900. So you can see similar to that chart on Bitstamp, just a different perspective. So you can use this as like a potential range on the macro until either side breaks. You break this to the 10.5, super bullish, you know, that means you've broken the downtrend resistance from the top. You've broken this horizontal resistance, you know, bull market. Let's go to 20K. Let's go to 50K. Now, if you lose this level here, we're talking about extended bear market, not looking good at all. All right. So let me take a sip of water. Hit that like for me, guys. Let's just do a quick little breakdown. It's already been 15 minutes. So I'll do look at my indicators as usual. I do also want to point out that Bitcoin dominance, you know, has been trending upwards, which means that the altcoins haven't been getting any love. Bitcoin, you know, took a leg up, and Ethereum sort of followed behind, not as much, and then coins like Link and Tezos didn't follow at all. So right now the trend, you know, if Bitcoin stays bullish, the trend has been, you know, to just stay in Bitcoin. You're better off staying in Bitcoin. However, if we see some altcoins break out, you know, it could be good for a trade. Okay. So looking at Bitcoin, we'll go to the weekly, do a breakdown of some indicators. I've looked at all the drawing tools. So putting in a nice green candle here, we'll have to see how we close at the end of the week. But that looks, you know, very healthy, you know, nice bounce. Okay, we bounced off the yellow 21 EMA. We want to maintain that level to maintain a bull thesis. Okay, so you broke above it, retested it, and bounced. Exactly what we'd like to see. And down the road, the yellow 21 EMA will get tested again, and you just want to maintain above that level. Your stochastics, your fast moving stochastic did get that cross here and called that little drop, but it's not aggressive. And if we're bullish, you know, this could end up just, you know, chopping around up top like that. So, you know, it depends. We're at a level of, are we really in a bull market, or are we just going to get rejected again and start a downtrend? So if we really are going to do something, you know, similar to this, you can see this will stay up there for a while. Your slow moving stochastic still crossed up and has plenty of room to go. So that's why, you know, if both of them cross down, that could be a confirmation of a downtrend on the weekly. Your Ichimoku clouds were interesting, I'm pretty sure, on the weekly as well. So right at that resistance level, the bottom of the cloud is at 95.43. We're at 94.66. So going into the weekly close, do we close above into the cloud? If we're able to close in the cloud, your next level is the top of the cloud at 10,748, which would stop out and liquidate any shorts that had, you know, their stop right up here. So that's definitely plausible. Otherwise, your support is this orange baseline down at 88.65. Okay, 88.65. Going down to the daily. On the daily Ichimoku clouds, your support is down at 87.80. You can see we bounced off of it here on the daily when you did get that rejection right before the halving. We never closed beneath it, so you got a nice little bounce there. Also, you know, that's the same as the 21 EMA, pretty much same deal. Bounce off 21 EMA. We closed this daily candle above the blue 10 simple and got a nice rally up. With a little bit of a sell-off yesterday, we just bounced off the daily simple. So going into today's close, we're looking to close above 93.19. Okay. All right. And yeah, maybe we can consolidate above that level there for another leg up. But if you close beneath, you know, 93.19, 9300, you could start targeting back here as well. You know, and guys, you know, this range could be larger, you know, than we expected as well. There's a lot of lines here. Let me go to BitMEX, maybe something a little cleaner. Perfect. So, you know, you could be putting in like a larger pattern potentially too, you know. So even if we do drop, you know, maybe you fill something out like that, you know, because you do have that 10 point or this 10.5 resistance level is pretty strong. So you could consolidate underneath it before breaking up is another possibility. All right, going back to Bitstamp, we looked at, so let's look at the Stokes. So the fast moving Stokes did get that cross up down here, so that was a nice call for the fast moving Stokes. Boom. And now we're looking to see if the slow moving Stoke can cross up. So getting a hint, but has not confirmed. So we need to see this bounce, I would say, off of 9,400 sometime soon. Or, you know, if we can break above 95 back to 96, you'll see this cross as well. However, if we dump, you know, this will continue back down that way. Never got the confirmation on the slow moving. All right, and that would probably coincide with this one turning over at the same time. You know, lower highs on the price and lower high on the daily RSI. But like I said, if you consolidate, this will end up just coming up this way anyway. So you're still in the bullish zone, keeping our eye on that. It's not bearish divergence because, you know, lower highs and lower highs. Now, if this was a higher high here and a lower high on the RSI, that would be bearish divergence. On the 12-hour, you did have bearish divergence on the 12-hour. You can see that. So high, higher high, high, lower high. So maybe that was, if you were looking at the 12-hour bearish divergence on the RSI, that could have been a signal for that dump over the weekend, actually. All right. So should have been looking at that. Your fast moving Stoke did cross down with that move, but your slow moving Stoke is still rising. So you know, this, you know, using the two of these Stokes, I find, you know, if they line up to cross around the same time, it can be a good call, you know. So you want to see something like that. So this one crossed up and then you had this one cross up after. That was, you know, a nice call there. So, you know, this one's crossed down. If this one crosses down next, you know, you could have continuation there. However, this one's still rising. So you could end up seeing this one cross back to the upside. All right. We've been only, you know, testing the strategy about a week or two. So, you know, the more I do it, the more familiar you'll be with it as well. Okay. The more you watch. Let's look at the moving averages there. Moving averages, above all moving averages still on your 12-hour and probably above all support on your Ichimoku. This is saying 9,090 support. Going down to the 4-hour, Ichimoku, you're still above all support. You have a green cloud in case we do dump. You have this as a support cloud there. Your moving averages, we are holding yellow 21 EMA support. So want to get back above that blue 10 simple on the 4-hour. And, you know, looking at it on the 1-hour, it, you know, you can see that downtrend I had drawn. So all you really need is to break out of that downtrend, which would also be breaking back above your yellow 21 and blue 10 simple on the 1-hour. So that's lining up there. So you want to close above those, which would also be closing above that downtrend. And then I would say, you know, 9,800 is the resistance level to beat. Okay, 94.84. So that might happen there. Going back to my 4-hour Stokes to wrap it up. 4-hour Stokes still coming down on the fast moving and coming down on the slow moving. So you want to see, you know, it's hinted at potential crosses here, but they never really fulfilled. Like, so could have been faked out on those times there. But, you know, overall, if we do get that break, you will see this one probably cross up. This one bounce from the neutral zone back there, and then this will follow as well. Let's see what the Stokes look like going down lower. The 1-hour hinting at a cross up, and possibly there too, but both are coming down. So yeah, we're at that little apex of this little triangle here. So based on the direction. So if it does pump, you're going to see these move up. going down to the 15-minute. Your 15-minute is crossed up on the fast moving, and this guy doesn't know what it wants to do, will just follow suit. Okay, but it's pretty low. Your RSI has been, just trending down, and eventually will get a bounce, I would assume, at some point anyways. Okay, so it's just kind of a falling channel, you can see right there. Another way to draw this would be this right here. So you're in a falling channel, and typically these break to the upside. Okay, all right, well, that is that for me. 25 minutes. I think that is a long enough video. I was in a link trade. I got out because it lost this trend line here. You can see on link we consolidating for about a month in a sideways range. So as long as Bitcoin can hold or continue higher, I think link will have it stay sometime soon. But of course, Bitcoin dumps, link will dump as well. I was looking for a potential, like ascending triangle type breakout to follow. This dump here was when Bitcoin dumped over that weekend. Bitcoin consolidated and broke out of an ascending triangle. So I was looking at link to possibly do the same thing. However, once we lost that trend line there, I got out of my link trade, and looks like it was a good move so far. However, link can still bounce here. If Bitcoin bounces, you just need to break $3.85 resistance level here. So need to get back above there, close above here, and then possibly get that breakout. So staying patient. Won't take too many trades over the weekend. Just choppy fake outs, wicks, can't be trusted. And then usually just you play the CME gap. So Saturday, let Bitcoin do its thing. And then on Sunday, where's the gap? And play the gap. You can see that the gap played out pretty nice. I don't think, the bears were not expecting this gap to be filled either. That was the largest gap that we have ever had, I think, in the history of CME gaps, and we filled it. So, that's why sometimes just, play the gap. It's not a perfect strategy, of course. The one time you decide you want to play the gap, it does the opposite. But more times than not, you are usually on the right side of it if you play the gap strategy, okay? And it's all about probabilities. You can't be right all of the time, as long as you're right a nice percentage of the time, right? All right, guys, so you can see CME also hitting that resistance flipped support level as well, so CME could get a bounce there. But CME will close in a few hours, and if it closes around this price, and we bounce from here, you're going to have a gap beneath. If we dump from here, you'll have a gap above. And this time, I'm actually done. So thanks for watching. Y'all have a great weekend, and I will see you next time.